The Countries and Consumers team have chosen the Future 7 as the next major emerging market economies to watch, and they are Turkey, Egypt, South Africa, Indonesia, Vietnam, Mexico and Argentina. And these 7 countries offer a lot of investment potential for the future in terms of their economic growth, their young and growing populations, and their rising income levels and an expanding middle class. There was also a non-statistical element to how we chose these countries, so we looked at a variety of factors overall, and these 7 countries stand out as the next major emerging markets to watch. In 2010, the world economy is in recovery following the worst economic downturn in 60 years. Every region of the world was affected by the global financial crisis and its knock-on effects, but it's emerging markets that are leading the global recovery. So many advanced economies will continue to see subdued economic growth, especially because their governments are having to implement austerity measures and tackle large public debt levels. So emerging markets are expected to continue to rise in importance on a global level. And in this context, investors are looking for the next major opportunities, particularly following on from the success of the BRIC countries. And we believe that the Future 7 offer medium to long-term investment potential. The Future 7 will offer many opportunities in terms of economic growth and their openness to global trade, and this will result in an improvement in living standards across all 7 countries. So GDP per capita in the F7 overall will increase by nearly 45% in real terms in the next decade. In terms of their populations, the populations are young and growing, and this is very important because many advanced economies are facing ageing and declining populations. So the Future 7 will offer a lot of growth potential in their labour markets and consumer markets generally. The population of the Future 7 will reach 741 million by 2020, which actually accounts for 1 in 10 global consumers. And finally, their income levels will also rise quickly in line with their economic development, and this will result in the expansion of the middle classes. So the number of households with a disposable income over $10,000 will nearly double in the next decade, and this will provide many opportunities for consumer goods and services. As with all emerging markets, the Future 7 do face a number of challenges. For example, a lot will depend on their regulatory policy, and income inequality is quite high in all 7 countries, which will weigh on consumer market potential. Their populations are also young and growing, but this can only really be a benefit if labour markets and the economies can keep up with demand. We ruled out certain countries, however, because the challenges were too significant. So in the cases of Pakistan, Iran and Thailand, for example, political instability is a major risk to the business environment. In a country such as Bangladesh, environmental risks are also a concern, and the fact that Bangladesh has a history of strike action also deters investors. So we believe that in the Future 7, the opportunities far outweigh the challenges. So even in the case of Mexico, for example, where the country is battling drug wars, the fact that Mexico neighbours the world's biggest consumer and is part of NAFTA means that it will continue to provide significant opportunities in the future. So overall, the Future 7 will offer medium to long-term investment potential, particularly in terms of the development of their consumer markets.